Hey there, and welcome to my channel, The Paper Bag Investor. In today's video, I want to talk about how to be a Tesla investor. The three most important things to watch. What are the three things that I'm watching most carefully as a Tesla investor? Okay, so what are they? The first one is full self-driving. What's Tesla's overall strategy, and how are they executing on that strategy? What are the improvements day over day, week over week, update, software update over software update? How is that going? The next one is the 4680 cell development. This is their special cell they unveil at Battery Day. How is that going? How is production of that going? When is production going to happen? And next is the $25,000 cars. You notice I actually pluralize that cars because there's likely going to be several different models of this very less expensive car, the $25,000 car. So full self-driving, I'm going to talk about a little bit further. Full self-driving. Why is it so important? It's because if Tesla achieves full self-driving, they'll be the most valuable company in the world, and by a large margin. See, full self-driving, I think it really has the potential to revolutionize the world we live in. When I tell people about full self-driving, I feel like it must have been like people in the 90s trying to explain the internet to other people. They get very, very excited about certain people. And other people will kind of just roll their eyes at them and yawn and move on with their day. That's what I feel like when I'm trying to tell people about full self-driving and the potential it has to revolutionize the world as we know it. And I think if you can capitalize on that and you can be correct on that, you can have massive returns over time, just like the people who bet correctly on the internet had those type of returns. And if we get this right as investors, Tesla is a terrific investment. If we are wrong, it's not a bad investment, but maybe not the best. That's why it's so important to be watching full self-driving and what's going on. And I want to give you guys a quick valuation on full self-driving, which I released in another video, but I'll just break it down quickly. If we say from 2020 to 2030, there would be 50 million Teslas in existence produced over this next decade, and this was assuming they do about 40% compound annual growth rate in vehicle sales, up to about 14 million annualized rate in 2030. You'd have about 50 million vehicles produced over the next 10 years. And let's assume 20% of those vehicles are used as robotaxis full time, so only 20% in the next 10 years at that point in time start to be used as robotaxis, get converted. Obviously, it would be some part-time, some completely full-time, but we're going to just take kind of a block of 20% full-time. So you get 10 million robotaxis in your fleet of robotaxis, and let's say each robotaxi can drive 100,000 miles a year of time of traveling around. So you get 50,000 billable hours a year. Say half that time is spent billable hours or billable miles and the rest is not. And let's say they charge, these could really vary, but let's say they charge $1.25 per mile to travel in a robotaxi. A car could produce about 62,000 in revenue in a year. And ARK Invest, they have this data here. They suggest at a robotaxi that's doing this many miles a year could be cost roughly on the sort of roughly 25 cents per mile. So for 100,000 miles, you'd have $25,000 in expenses for that vehicle. So you'd have a net profit of $37,000, which is your 62,000 minus your expenses of 25 gives you 37. And let's say assume 22,000 goes to the vehicle owner who manages the vehicle, owns that investment, and maybe 15,000 goes to Tesla. This could obviously vary as well. A number of these are sort of sliding scales, could be adjusted, but we're trying to pick something in the middle that seems reasonable. You would get a robotaxi operating profit of $150 billion a year for Tesla in 2030, which is your 15,000 per vehicle times by 10 million robotaxis, and let's say we give that a PE of 40 to the operating profit, would give 6 trillion market cap from the robotaxi side of the business. I'm trying to be quite conservative and not sound like a crazy guy on YouTube, but I actually think this number could be higher, much higher, because at that point they're making 14 million vehicles a year. Who's to say most of those vehicles aren't becoming robotaxis every year? And every year by 2031, instead of 10 million robotaxis, maybe you have 20 million full-time robotaxis. And 2032, you have 30 million robotaxis, and so on and so on and so on. And it keeps expanding. There's something in the order of around 2 billion vehicles on the whole planet. So 10 million is like a drop in the bucket, and there'd be massive room for growth. And this number could be theoretically much higher than that. Okay, so then if you add this to the vehicle side of the business, which I estimated in that other video, I won't break that down, 2.7 billion could give a market cap of about 8.7 trillion by 2030, which would represent a share price of over $9,000 a share, assuming no dilution from then until now. So huge growth ahead. Okay, the next one I want to talk about, the next biggest thing to watch is the 4680 cell. The 4680 cell. These are the cells that were unveiled at Battery Day last year, and Tesla is battery constrained. They made it very clear in their recent earnings report that if they could make more batteries, they would be making and selling more vehicles. Batteries really are the limiting factor to their growth. And the 4680 battery was unveiled at Battery Day and promised to increase the battery range, the vehicle range, and lower the cost of batteries, and lower the capital costs for the factories that make the batteries as well. Also very important. So these cells are being produced now in a pilot plant near Fremont, and we should expect to see them in production soon. I'm not exactly sure when, but this is something very closely to watch, because this could be a big leap forward in battery technology. And because the more batteries they can make, the more vehicles Tesla can sell. Okay, the third thing to watch is the $25,000 car, which could be coming out in the next couple of years. So the $25,000 car, or cars, I actually pluralized that. At Battery Day, it was announced that Tesla would be making a smaller $25,000 car, and they'll likely be actually making several iterations of this vehicle. Elon confirmed on Twitter that Shanghai and Berlin would each make their own version of this vehicle. And this is actually a point that I think many people miss, is that Tesla will continue to make more vehicles that serve different customer needs. If they're going to plan to make upwards of 20 million vehicles plus in the future per year, they're going to be making all kinds of different vehicles, different $25,000 cars, vans, etc. Maybe if they reach full self-driving, they'll just be little cube vans for delivery purposes, and maybe different maybe highway, city-to-city transportation, full self-driving vehicles, maybe in the city, full self-driving vehicles that are catered towards that. So the world could really change dramatically with full self-driving, and Tesla will obviously adapt and make different vehicle models that serve these needs. But this $25,000 car is really important to watch, because it's going to make the vehicle much. It's really going to pump out high volumes of vehicles for Tesla, because they'll be use less batteries for vehicles because they're smaller battery packs, cheaper car, and and the batteries would just be lower cost, so they can afford that. So these three things, I really want to point out, these three things compound and complement each other and create a flywheel effect. See, the 4680 batteries allow for the $25,000 car because they get the battery pack cheaper, and you're able to, and your battery production's increasing, so you're able to make this higher volume car. And with a $25,000 car, smaller battery pack allows for more vehicle units delivered. You get more vehicles out on the road, because each vehicle is using less battery capacity per vehicle, and because your battery capacity is growing with these 4680 batteries that they're just going to rapidly expand production on. And then the bigger thing is actually full self-driving's value is a function of how many vehicles are in existence. So the more vehicles that are in existence equals the more value that will be for the shareholders, for the company. And that's why these three things complement each other so well and fit together so well and are so important. Thank you guys for watching this video. If you got value out of this video, I encourage you, hit that subscribe button down below. Follow along with my channel as it continues to grow. And I'm all about looking at high growth, long-term investments that I think are really optimal, excellent investments that you can hold for years to come, and looking at them from many angles and as deeply as possible. So that'll interest you. Hit that subscribe button. Hit the thumbs up while you're at it. That helps my channel grow. Appreciate that as well. Okay, thank you guys for watching. I'll see you in my next video.
Thank you.